welcome back to Kicking It with Colton House, and we are talking all things lending. Lending is the most important process in buying a house because without it, guess what? You don't get a house. So go and get a pen and a paper because you're ready to take some notes, okay? We are digging deep into the process. We are going to be talking from beginning to end. We're going to be giving some definitions so this way you can understand what we're saying and some of the acronyms and the words that we're using. So we're going to give you 2 minutes. Go and get a pen and paper and get ready to take some notes. All right, and I am Venetia.
And I am Jenny Fitzpatrick.
Lori Coton.
And I'm Craig Levine with First United Mortgage Group. My NMLS is 6066.
All right, so Craig is our special guest today. We are going to pick his brain. We are going to dig deep, and we are going to talk about everything lending from beginning to end. So let's start with what is the difference in a pre-qualification and a pre-approval?
Okay, awesome question. So to get started when you want to buy a house, you need to know if you're qualified. To determine if you're qualified, we're looking for 4 factors. We're looking for your credit score, we're looking for your down payment, we're looking for your what's called debt to income ratio. We'll jump into that a little more depth later on, but it's also called DTI. And then lastly, your assets. And those 4 things will determine how much you qualify for, what your rate is going to be, and what program you qualify for. For me to do a pre-qualification is we're going to speak on the phone, we're going to do an application, I'm going to pull your credit, and I'm going to look at those 4 factors to determine do you qualify for a house or not.
Okay.
And that is a pre-qualification.
I always thought a pre-qual was whatever they told you verbally.
Yes.
So
Correct.
it's basically not the whole process yet. It's more so based off of what you tell me verbally on this application or our conversation, I can pre-qualify you based on what you're saying. But then once it's time to actually say an approval, I need all of those documents to prove what you're saying, and we back it up with your approval.
So this might be a little bit more lender specific, but for me to do a professional pre-qualification, I will pull your credit.
At that moment, okay.
I'm going to trust that you tell me how much you're going to make is how much you make.
Okay.
I'm going to trust that you tell me how much is in the bank is how much you have in the bank. If you're self-employed, it's different.
Okay.
And then I need you to prove it to me up front because we need to see it on paper just because of deductions and whatnot.
Mm-hmm.
But if you're a salaried employee and you say you make $50,000, I'm going to assume you make $50,000. A pre-application will be you now provide me the paper evidence
Okay.
to back it up.
So that'll be the difference in
It's
pre-approval and
stronger. A
pre-qual.
pre-application is stronger than a pre-qualification.
Okay. Which means they went through the whole process, got your docs in.
Correct.
All right. So what would be, I guess, we talked about this earlier, and I think we throw around the word like, what's the difference in a mortgage broker or your lender, or like, what is that? What are those words? Like,
Can I jump in?
Absolutely.
Can I jump in on something first before Craig answers that? Because that's all super important. We all know why we need a lender. We need a lender because, like Venetia was talking about in the very beginning, no money, no house. And the whole reason you're looking for a realtor in the first place and talking to a lender is because you want a house. So when you first start the process of looking for a home, you typically start to look at homes online, then you may call a realtor. That realtor is going to be really helpful to you in figuring out how to get a lender, who you should go to. Very, very important. Realtors, a great realtor should always have a great lender or two in their back pocket to be able to say, this is who you should go to. And what do we as realtors get out of this? We get happy and content.
Right?
Who can actually buy the house?
Yeah.
Because money, house. So that's really the first step. Craig can, or your realtor can explain the difference between a pre-approval and all the other kind of nuances in the beginning of getting a loan. But you come to a realtor is going to be able to refer you to a lender. You want to work with a realtor you trust and can talk to about all things homes, and you want to have a lender that you can talk to who is accessible, who you can talk to about all sorts of different scenarios as far as lending goes. So kind of a macro look at lending when you think, where am I supposed to start? is talk to your realtor, and your realtor can refer you to a lender who they know is going to do a good job for you. And that's the only thing, and it's a wonderful thing, that's the only thing that realtors get out of referring is a happy client who can actually buy a home.
Well, since you even brought that point up, Lori, would you say kind of like it's important to, I guess, consult your realtor on who you use as a lender, because at the end of the day, everybody works in the same transaction. So if you have a lender that is shaky or not so great, what's going to happen to that transaction?
Well, we have one agent in the office right now that has that issue, and the lender is not picking up the phone. And this is before they've even gotten to the races. They don't know if the appraisal's been ordered. They don't know if the survey's been ordered. They don't know anything. And of course,
Wow.
her good advice was, you need to walk away and you need to talk to Craig. Because we know Craig is going to answer the phone, and we know Craig is going to be honest, and you know you're going to know where you are. Plus, the other thing is you've only got a certain amount of time
Mhm.
in your contract to do certain things. So it really needs to get partnership. It really does. An excellent realtor
Mhm.
such as you two, an excellent lender such as you makes a world
Of
of
a difference,
difference
yeah, in a
to get
transaction.
you to your home.
So, I mean, everybody's making such great points. I don't even know where else to start at.
Well, you were
That's
talking
unusual.
about, it's a great way to start talking about kind of what's the difference between going to a local mortgage broker,
Yes.
Bingo.
brick
Yes.
and mortar local mortgage broker. Woo, say that 3 times fast. And just walking into some
Like your bank.
on the corner.
What would
So,
you say would be the difference in using an actual broker versus someone, like you said, walking into the bank, or I have a credit union and they're going to give me this?
Right. So when you're shopping for a mortgage person, right, it's not just about who's giving me the best rate. It's a experience and the type of loan you're doing, how communicative
Yep.
are they?
communicative. We don't know. We can have a whole.
We made it
a whole
work.
lot of that.
It was my strategy
Yeah.
to do that. So you know, there's a lot of things to it. The big thing is when you go to a bank, and I work for a bank, is we only offer what our bank has to offer. I only have to know what my bank's programs are. When you go to a broker, they're a middleman and they're going to shop for different banks. Truthfully, they don't really shop. They have software. They put it in. This says this bank has the best thing, but they have to know what those banks' programs and guidelines are. The other part to it, and we'll get back to this word underwriting, is a bank will do its own underwriting, meaning our decision makers will determine if you have a loan. When you go to a broker, sometimes the broker has internal underwriting, but sometimes they have to do external underwriting, which is much more complex to the problem, or a whole lot of extra paperwork is
So
involved.
it may add on additional steps.
Adds on extra steps. The big thing I'd like to emphasize is no matter what you do, is go with somebody local. And the reason is if you're buying a house, I want to represent you to the best of my ability. But I also want more business, and I want to impress your realtors, right? Because I want your realtors to be able to refer me more business in the future. So I'm not just trying to do a great job for you, I'm trying to do a great job for both the buyer's realtor and the listing agent. If you go with somebody, let's say on the internet, for example, they don't have that same passion or desire because it's a one-time transaction.
They don't care about the relationship.
They don't care about the
We all
relationship.
care
They're not
about
working for
relationships.
those realtors. They're working for you, the client, and then that's it. I'm trying to wow everybody in the
It's
process.
a file number when you're on the internet. It's
That's
like, listen,
exactly right.
you call in, it's like you may not even get the same person you've been dealing with. You're a file number, you're a
Yeah.
transaction number, and they're like, oh well, give me a minute, let me look into your file, give me 3 minutes and
Yes.
see,
Yeah.
you know,
Correct.
and
That's
then
a great
see what's
point.
going
Yes,
on.
it
It's
is a
like,
lot.
It is a good one.
what?
And you know, let's face it, when you're making an offer as the agent representing the buyer,
Mhm.
it is very strong to say, we have a local
Yep.
vendor that we're going with.
Yes.
Big time.
Very strong.
That can make a difference in accepting an offer. I know you have a lot of listings that you have gone with clients. Is that sometimes a decision maker for you or your client where they're like, look it,
100%. 100%.
can we actually close this loan?
Yes,
Yeah.
for situations, absolutely. I mean, we talked about it, I mean, that's kind of the theme of our
Yeah.
show, no money, no house. So when I look at, they say, oh, sure, we want to try and close in 30 days. Okay, well, if you want to close in 30 days, you need somebody like Craig who's going to get the job done. If I see a big name bank that a lot of them are very notorious for taking a long time and not having the process down pat, I look at that and I say, oh my word, well, let's look at pre-qualifications. The first thing I do is look at the letter that a lender has written and I call that number. Is the person going to actually pick up? Is that lender, that bank, that broker, whoever it is, are they actually going to pick up the phone and say, hey Jenny, nice to meet you.
Yeah.
This is what the situation is. They're not giving me any personal information on the potential buyer, but they need to make me feel better about the fact, yes, I actually wrote this letter. I've actually looked at their documents. It makes a huge difference when it's a local mortgage lender who picks up the phone, and a great lender even picks up the phone on a weekend, because when do a lot of people do home buying?
Bingo.
On a weekend.
Yeah.
And if you're talking to your 1-800-BANK or whatever, they're not going to pick up on a weekend. You want somebody who's going to advocate for the buyer, and that's really important. And I can tell you, really, with very few exceptions, it's always the local mortgage broker that will pick up the phone and will help somebody be able to buy a house, which means talking to the listing agent and
Bingo.
making the listing agent say, my client is super solid, please choose them.
Yeah, and that is a big decision factor. So Craig, like, I know you said like you work for the bank and you have your own very specific programs and guidelines that you have to go by. Is there like a such thing as, I went to this place and they were going to give me this, can you match them?
Sometimes. So it's actually a very great question. Certain companies, mortgage companies, specialize in certain products, and products being, there's a conventional product, there's fixed rates and adjustable rates, there's 30-year fixes, there's 15-year ARMs. Then there's FHA products, there's VA products, there's jumbo products, there's construction products. So the first thing you want to do is find out who is the best lender for the product I'm looking for, right?
Yep.
I specialize in jumbo loans. I do more than that, but
Jumbo
my bank-
loans meaning what?
in
amount?
Houston, a loan over $650,000 for the most part.
Okay.
I'm rounding. And that's loan, not purchase price. Whereas a broker, they're not as aggressive on those. So that's an advantage to using me. But so when you're shopping is do you specialize in the type of loan amount or loan program I'm looking for? And then yes, if it's close, we'll do what we can. We should all be in the same ballpark to start with. Sometimes you have to read the fine print, because often a lower rate just means you're paying more in fees. And I don't know if you want to dive into that so much, but typically the lower rate, the more you pay up front, and a higher rate, the less you pay up front. And often if you get 2 or 3 quotes, your loan officers can walk you through comparing the quotes and see which is the better deal for you.
Yeah.
And I'll jump in here and say, it's never the best way to shop to call a lender and say, what's your rate?
Yeah.
Because you just don't
We
know.
just was talking about this.
All
We
the
just were
things.
talking
It's
about
actually a terrible way to shop for a lender, because it's not just rate that's going to make a difference. There's a whole lot that goes into it, and I think we'll probably need a whole nother discussion about that. But I think that just so everybody knows, it's a terrible way to shop for.
So
shop for a
let me comment on that real quick, because that is a great question that people typically say is, what is the rate? And my second question back to them is, are you under contract? So my first question is, are you under contract? And the reason being is for me to give you an actual quote of a rate, you need to be under contract, because rates change on a daily basis. They can change up to 4 times a day. What the rate is today will be different in a week from now, 2 weeks from now, 3 weeks from now, 4 weeks from now. So shopping for the rate first isn't necessarily the way to go. What you want to do is find a lender that you can build rapport with, that your realtor trusts, that will answer the phone, that will give you the correct advice and guidance for your mortgage. Get your pre-approval letter, go find a house, and then you come back and shop for rate. You just don't shop for rate first thing off the bat. That's just not the sequence of events.
Yeah, what is that? What's that saying? Putting the horse before the cart or something like that?
That's it.
Whatever that saying is.
Cart before the
Yeah.
And
That's
it all
basically
goes, all goes back to no money, no house.
Yeah.
So what do you do first? You get pre-qualified, then you go shopping for a house.
Exactly. So I mean, we are really kind of like digging deep. I hope you guys are taking notes. If not, you're gonna miss out and you're not gonna have a house. But we are going to continue this with part 2. We are going to talk about the process from beginning to end in part 2. So go ahead, get up, stretch, do some lunges, get the blood flowing, go get a sip of water, and meet me back here because we're gonna get to talking about this process.
I've been working all day.